In this video, we'll learn about what is Sensex and Nifty index. In order to understand what is Nifty and Sensex, you need to understand the Indian stock exchanges first. Now let's discuss the two major stock exchanges in India, that is the Bombay Stock Exchange and the National Stock Exchange, along with their indexes. So Bombay Stock Exchange. Bombay Stock Exchange or BSE is an Indian stock exchange located at Dalal Street, Mumbai, Maharashtra. It was established in 1875 and is Asia's oldest stock exchange. It is the world's fastest stock exchange with a median trade speed of 6 microseconds. The BSE is the world's 10th largest stock exchange with an overall market capitalization of $2.29 trillion as of April 2018. More than 5,500 companies are publicly listed on the BSE. So what is an index? Since there are thousands of companies listed on a stock exchange, hence it's really hard to track every single stock to evaluate the market performance at a time. Therefore, a smaller sample is taken which is the representative of the whole market. This small sample is called index, and it helps in the measurement of the value of a section of the stock market. The index is computed from the prices of selected stocks. Coming on to Sensex, which is combination of the two words sensitivity and index, and it is also called the BSE 30, is the market index consisting of 30 well-established and financially sound companies listed on the Bombay Stock Exchange. The 30 companies are selected on the basis of the free float market capitalization. These are different companies from the different sectors representing a sample of large, liquid and representative companies. The base year of Sensex is 1978 to 79 and the base value is 100. It is an indicator of market movement. If the Sensex goes down, this tells you that the stock price of most of the major stocks on the BSE has gone down. If the Sensex goes up, it means that most of the major stocks in BSE went up during the given period. For example, suppose the Sensex is 41,700 today. If Sensex drops to 41,450 tomorrow, it means that the majority of the 30 companies' financial condition is not good. That is, their share price is falling. National Stock Exchange. The National Stock Exchange or NSE is the leading stock exchange of India. It is also located in Mumbai, Maharashtra, India, and it was started to end the monopoly of the Bombay Stock Exchange in the Indian market. NSE was established in 1992 as the first demutualized electronic exchange in the country. It was first exchange in the country to provide a modern, fully automated screen-based electronic trading system which offered the easy trading facility to the investors spread across the length and breadth of the country. NSE has a total market capitalization of more than $2.27 trillion, making it the world's 11th largest stock exchange as of April 2018. NSE's index, the Nifty 50, is used extensively by investors in India and around the world as a barometer of the Indian capital markets. Nifty or Nifty 50. Nifty is also called as Nifty 50 and it is the market index consisting of 50 well-established and financially sound companies listed on National Stock Exchange of India. The base year is taken as 1995 and the base value is set to 1000. Nifty is calculated using 50 large stocks that are actively traded on the NSE. The 50 companies are selected on the basis of the free float market capitalization. Here, the top 50 companies are selected from different 24 sectors. Nifty is owned and managed by Indian Index Services and Products. Since inception in 1995, Nifty has given a return of 11.13% till April 30, 2018. So we have all probably heard about the Nifty and Sensex movements. But what does this mean? The Sensex and Nifty are both indicators of market movement. If the Sensex or Nifty go up, it means that the most of the stocks in India went up during the given period. With respect to Nifty and NSE, we can say that if Nifty goes up, this means that the stock price of most of the major stocks on NSE has gone up. On the other hand, if Nifty goes down, this tells you that the stock price of most of the major stocks on NSE has gone down. The same is true in the case of Sensex. Moreover, when Sensex or Nifty goes high, it shows the economic growth of the country. Else, if it keeps on declining, it might mean a slowdown or depression. For example, during the Indian recession of 2008 to 2009, the Sensex fell over 12,000 points. That was 60%. The fall in Sensex was analogous to the recession, meaning people were selling their shares on an economic crisis in the country. Now let us talk a bit about importance of market index. The market indexes are the barometer for the market behavior. It gives a general idea about whether most of the stocks have gone up or gone down. Often, market index is used as a benchmark portfolio performance. It is used as a reflector of investor sentiments. Market indexes are used for sorting and comparison of the various companies. Indices act as an underlying for index funds, index futures and options. They are used in passive fund management by index funds. The index can give a comparison of returns on investments in stock markets as opposed to asset classes such as gold or debt. So that's it for this video. You can visit our website stockquantum.com for more information, and thank you so much for watching.